Good morning, traders, and welcome to the live stream. My name is Charles Goff. This is Pirate Traders, and we are going to focus on the ES, the NQ, and how they move through the two-way auction process here today. Okay, so yesterday we said because the market had opened with a gap down, there was basically one of two scenarios that was going to happen. We were either going to go sideways and get a balancing day, or we were going to start a sell-off with price, and we were going to start to head lower. Well, in the end, we got the balancing day. So what are we thinking this morning? Well, once again, we are opening inside the previous day's range, so I am predicting we are going to get another balancing day. In my mind, the odds today are either that we're going to go sideways or that we're going to go higher, okay? And the reason for me believing that is that we didn't really have any momentum down yesterday. If you look at the lower end of yesterday's range, that was an impulse move in the A period that was never able to be retraced. Later on in the afternoon, when they tried to get down there below, say, 69.50, they immediately found support each time and came right back up. If you look at the overnight range last night, we got that 70-degree angle right there, which is basically just telling us that, the market found support. It doesn't need to go lower. So both yesterday and in the overnight last night, the market gave us clues that it doesn't really need to go down. If it wanted to go down, it had its chance yesterday, it had its chance last night, and it didn't do it. So it probably doesn't want to go down. What it wants is either to keep going sideways, to keep doing what it's been doing, or to turn around and start heading back up again. So that is why I say today I am neutral to bullish on what I think the market is going to do. Okay, well, that just happened so quick we didn't even have a chance to talk about it, but we just looked above and failed yesterday's high. So that is a neutral sign. Okay, if it were bullish, we would have stayed above yesterday's high. So I would now describe this as a chop zone from 69.72 to 69.55. So basically from yesterday's high to the overnight low. This is now a chop zone. And as always, when we have a chop zone, we can't really predict exactly what's going to happen inside the zone. But when we get out of it, we can get a pretty good edge. So if we get above yesterday's high again and we start to hold it, then we can assume we're breaking higher. And if we fail, we can assume we're staying in the chop zone. And if we get to the chop zone low, which is the overnight low, and we look below and fail, it's more chop. If we look below and we get new selling, it's bearish for continuation to the downside. I am curious, where do you guys think we're going to close today? So we took the survey 2 days ago, and the chat was completely wrong. We took the survey yesterday, and the chat was a majority right. So where are we going to fall today? Do you think the market is going to go higher, go sideways, or go lower today? Let us know in the survey. Trevor in the house, good morning to you. David is here, welcome. Jay is with us. Pirates, it's Friday. Friday rules in effect. What are the Friday rules? Let the good times roll. Let them chop it up. Mark is here. Good morning to you. Grizzly Bull in the house. TGIF. Crypto Rider is here. Will. Rich. Oh. Yeah, thank you for pointing that out. I got the numbers wrong on the poll. I meant 69, not 59. Good catch. Laura in the house, good morning to you. Mark says he voted for above 59.90. Might be right for once. Yeah, sorry guys. I meant 69. Billy K in the house. Auntie is here. Tom, good morning to you. XU in the house. Good morning to you. Welcome. All right, so we are above yesterday's high. That is bullish to see. Now the question is, can they turn it into support? Can they hold 69.72? Okay, so when we look at the ticks, what do we notice about the ticks? We opened all the way up at positive 900. So we opened with the ticks overbought. So that means we're probably, no matter what, even if we're going to go higher today, we're probably going to need to chop around through the opening price a few times and give those ticks a chance to cool off and come back to the zero line. So if you're getting bullish this morning, you might not be wrong, but you might be early. Because we can't really trust bullish momentum until the ticks get back to the zero and then they bounce. If you have not yet, please smash the thumbs up button. Those likes really do help the channel. Today will be my last day going live, to the public this week. Be back to behind the paywall next week. So if you have been enjoying these live streams and you're thinking about joining the brigade, now's the time. Next week, you'll be on your own. Jay says the NQ is weak. Let's take a look. As I said, I think the ES has to bounce on that opening price a few times while those ticks cool off. Let's see what's happening with the NQ. No, I would not describe the NQ as weak. Here's how I see it. We talked yesterday about the fact that 2 days ago, that was a look above and fail, which means we should be heading down to the balance area low. So the fact that yesterday the NQ didn't sell off much further than it did is sort of a contradictory signal. We would have expected an elongated profile to the downside yesterday, but instead we just ended up with a B. A B is a sign of momentum down, but it's not as much as an elongated profile. Okay. Then when we look at the overnight last night, what did it do? Same thing as the ES. It just went sideways and even explored slightly higher prices. So both markets this morning are giving me balance with time vibes. They're giving me sideways vibes. Neither one is quite bearish right now. For the NQ to get bearish, it'd have to really start to get some substantial selling below that overnight low. Then I'd start to get bearish. But for now, the NQ's chop zone is 25,623 to 25,800. And it's just in its chop zone, chopping up right now. I would not describe that as bearish yet. Okay, so we just repaired the first week reference that was in need of repair above price. That was 69.85. This is where we get an idea of how much momentum we may or may not have to the upside. If we reverse now and come back down to yesterday's high, then we don't have very much momentum. and it's probably going to be a sideways day. If we continue to stay up here near the overnight highs and we bring in new buyers up here, well, then it's very bullish that we're going to keep going. So each time we repair a weak reference, we take away one of the magnets pulling on price. So then the question becomes, do we still have buyers without that magnet? So if we still have buyers, it's bullish, it'll keep going. And if we don't, it needs a pullback. Moments like this can be very frustrating because the market is making its move very quickly in one direction. But because of the fact that the ticks never got back to the zero line, we know that it's going to retrace. This market is going to come back to 69.72. The hard part is predicting timing. Is it going to go up first? Are we going to go up to 96 first and then come back down? Or are we going to come back down right this minute? Or are we going to go sideways for 10 minutes and then come down? I just don't know. But I know this thing is not going to keep going straight up all day unless it can come back to the zero line first. So at some point, it needs to pull back. So essentially, if you're going long this market, you want to move your stop above your entries as quickly as you can. You want to lock in profits quickly and re-enter trades rather than just get long and close your eyes and wait, because there's a very real chance we're coming back to 72, even if we're going to make new all-time highs today. We describe this as the market getting itself overly long, overly fast. The overly long part is bullish. The overly fast part is not. XU says, do you focus on the POC for the market profile and volume profile? Sometimes they are different. Yes. So you can calculate your point of control based on time or volume. We call the time one the TPOC and the volume one the VPOC. And so the way I think about it is intraday on the day I'm trading, I'm focused on the TPOC. So the POC that you see on the chart is the time point of control. Okay. Very simply, it's just whatever level the market spent the most time closest to the center of the range. Okay. If I'm talking about from one day to the next on a daily time frame, then it's volume profile. So yesterday, intraday, as the market's going up and down and up and down and up and down, and I'm looking for a level to take profits, I'm using that time point of control right there, which is at around 59. Okay. That's what would be my target. But if today I was shorting the market because I thought we needed to retrace back into yesterday's range, for example, we don't get support at yesterday's high, and I know we need to dip back into yesterday's range, well, then I would want to use the volume point of control as a target to the downside. So time for the same day, volume on subsequent days. And I go over that in detail in my Mastery of Markets and Minds workshop, why I approach it that way. And it all just has to do with how the auction process works. First, price advertises. It goes to a new location. Then time regulates. Time tells us whether we can stay there or not. And then volume measures. So this morning, the first move of price was a move up, right? Price is advertising at a higher level right now. And at this moment, what are we doing? Well, we're spending time up here, right? We didn't go up and turn around and come right back down, did we? No, we went up and we stayed up, right? And so the next thing we're looking to find out is, okay, we were able to bring price up here. We were able to spend time. Now, are we able to bring in volume? And if you can do all three If you can push up to a new location with price, spend time at that new location and bring in volume, which by the way, we're doing right now, that is bullish. If you pushed up, that it's going to keep going. Or if you push down and you spend time and bring in volume, it's bearish, so you're going to keep going down. So intraday, time is the more important thing, because where we spend the most time is what will decide what happens next. But from one day to the next, it's the volume that matters. That's what tells us. So we got to keep track of both. Okay, so I'm now watching halfback right here at 78 for support. We were able to get the ticks back to the zero line without having to bring price all the way back to yesterday's high. So there's a chance that we just bounce right here and make that move up without coming back. So I'm watching those ticks for that bounce right now. Do they head back above the zero line? If they do, I'm bullish for continuation. If not, we come back for yesterday's high. Okay, no bounce. So we're coming back to yesterday's high. So this is a really important moment for the market to carry forward for the rest of the day. The chop zone was the previous day's high to the overnight low. We broke out of that chop zone. Okay, that's bullish. So now we need to bring in new buyers to keep the momentum going to the upside. So as long as this high, 69.72, holds as support, we are bullish, and we assume it's going to keep going higher. But if we come back down through the opening price, we're back in the chop zone, and it's going to start chopping once again. So the buyers really want to hold 72 if they want to keep this momentum going. So I am only bullish as long as we remain above the opening price. Gerard says, how much is your foundation course? It is called the Mastery of Markets and Minds Workshop. You can find the link in the description, or you can just type in marketsandmind.com and it'll take you to this this homepage right here. So the course is $500. You can save 10% if you use promo code BRIGADE when you sign up. It takes place between February 9th and 20th. So it's, 5 days a week for 2 weeks, and they're 4-hour lectures. You don't have to watch them live. You can, watch the videos after the fact if you can't be there live during the day. If you would prefer to watch them at, 4x speed or whatever, you can wait and watch after. But there's a reason why it's, 10 4-hour long lessons. There's a lot to teach. Okay. Because I don't just teach you how to read a market profile chart and market internals and Bookmap and Spot Gamma. I teach you how to understand the auction process. I teach you how to manage risk. I teach you how to develop setups. I teach you all my trading setups, all my trading rules, everything. I'm basically taking like 10 years of me making mistakes and cramming it into a 2-week course so that you don't have to make any of those mistakes, so that you can have the fundamentals to at least be moving in the right direction as you move forward in your trading. So if you are interested in signing up, head on over to marketsandmind.com. Remember, promo code BRIGADE. Okay, moment of truth. Can they hold it? If they can stay above the opening price, this will be the lowest risk place to get long today. If they come back through the opening price, you're set up for a few hours of chop. Willie T in the house. Good morning to you. Tom says 20 minutes to earthquake time. Tariffs, will they or won't they? Rich says, yes, Supreme Court decision at 10 a.m. Well, we'll keep an eye out for some volatility there. The market loves to be at these key levels right when a news, event drops. So dancing right on yesterday's high makes sense. I tried something new with the live stream today. YouTube gave me the option of just streaming, horizontal the way I normally do, or having a vertical stream as well. I tried the vertical stream as well. Is anyone using it, or is everybody watching the, horizontal screen? If anybody's using the vertical, let me know in the chat. I'm just curious. A lot less information on that one. Much smaller section of the screen. Rich says, how do we see the secondary screen? I don't know. This is my first time ever using it. I have no idea. I assume it's if you're watching on the phone, you have the option of switching to see it vertical. Mark says, can the market crash for both the announcement of the tariffs last April and for the Supreme Court's decision to end them less than a year later? The answer? Oh, yeah. Yes. When you're playing the fundamentals game, the answer is anything can happen. The market could suddenly be hit with the worst news in the world right now. You know, COVID 2.0 is out. You name it. And it could still go straight up. You could give the best news the market could ever get, and it could still just go straight down. Because the way the market reacts to news is not based on the news. It's based on what's priced in prior to the news. So if everybody thought the news was going to be good, they're already long. There's no one left to go long when the news comes out. And as soon as those first people start to take profits, the market actually goes down. And if everybody's expecting bad news, they're already short the market. So if that bad news comes out, there's no one left to go short. And so a lot of times you get the opposite reaction that you would expect. Okay, so as always, when Bookmap goes dark like this, we know they're waiting for news and they're going to react to the news. And we always want to wait until the liquidity returns before we assume we have momentum one way or another. Okay, so nothing has changed about my thesis here. I'm bullish as long as we stay above the opening price. But if we were to just poke below it real quick and come back up, I'd get bullish once again. It's really when the liquidity returns, when all this yellow starts to come back in the chart, that we can trust. If we start to get selling momentum, then we can trust it. Otherwise, it's just a reaction to the news. Candle Swinger says, what does spot gamma look like? Earlier this morning, it was a nothing burger. But we can take a look now. Yeah, I'd say nothing burger. So there's no clear strike price. That is like a target for the market to get to. It's pretty evenly spread. You've got about the same amount of gamma above and below price. So there's no clear level it has to go to. Right now, the hero line is pointing down, which is bearish. But like I said, I wouldn't be shorting the market as long as we're above the opening price. So I have a feeling if we hold yesterday's high, this is going to turn around and come back up. So I'd say we just need more time and more information on the options data right now. And the answer is the U.S. Supreme Court will not rule in the Trump tariff case. So it's not bad news, but it's not good news. Oh, no. Okay, so I know I said this before, but I'll just repeat it again. If they can hold yesterday's high, it is bullish for the rest of the day today. Okay? But if they fail and they pull back through that opening price, pull back through 69.70, then we are going to be going sideways for hours. So the buyers want to bounce right now, lest they give up any chance they have of momentum to the upside today. And there you have it. Crossing back through the opening price means I'm back to neutral. And this market is back in a chop zone. So essentially, what does that mean from here? It means we're likely to pull back down towards the overnight low. Okay, anywhere in between yesterday's high and the overnight low, it's going to be an absolute mess. It could liquidate instantly. It could slowly grind. It could go down and come back up and go down and come back up. It can go straight down and then break lower. I mean, anything can happen here. So we're back in a chop zone until we get below the overnight low, in which case we either get a look below and fail, and then we know we're going sideways the rest of the day, or we get new selling, and then we become bearish. It is not appropriate to become bearish right now. Okay? I mean, unless you just want to take a quick little scalp trade for like 5 points or something. There's no reason to be bearish here because the market could find support anywhere inside this overnight range, get back above yesterday's high, and then the party's on later on in the day. So all this is telling us is chop. It's just telling us the market doesn't know what to do. And if you're looking for a deeper explanation, the market was hoping the Supreme Court would make a decision. Now the Supreme Court won't make a decision, so people don't know. Do I want to buy or do I want to sell? What do I do? Oh, fuck. And so give them a couple hours to decide. And over the next few hours, expect the market to go up and down and up and down and all over the place. But as long as we're inside that chop zone, it could reverse at any moment. Welcome to the chop zone. Pushing into some support right here around 62. Looking for a bounce. Rod says the ES 6960 hit. It always do its routine. Hit the big first big volume high or low. Yeah, we call that the volume point of control. So what you are saying is absolutely true. If you are above a previous day's range, okay, so let's say in this case we're above yesterday's high, and the market cannot turn it into support, right? Obviously, if it turns it into support, it's just going to keep going up. But if it cannot turn it into support and it needs to retrace back into the previous day's range, it will almost always get to at least the volume point of control, meaning the level with the most volume, which was 62 yesterday. So, yep. But it's all case-by-case basis. If the market had opened this morning, it had gotten above yesterday's high, and it had held that, well, then there would be no reason to come back to here. We'd be heading up to the point of control from 2 days ago instead. But we couldn't hold it. We came back in, so we returned. And now the question is, what comes next, right? We're in the chop zone. We got the liquidation. Now we're getting the retracement. Remember, oftentimes a market breaks right before it rallies. The liquidation is what strengthens the market. So there's a chance we turn around and try to make new highs now. But of course, we're waiting to see what happens at yesterday's high. This is still the chop zone. XU says, Charles, someone put 1495 contracts on 6960. Okay. I'm not sure what you mean by that, whether you were saying that there was liquidity there on the way down or afterward. But yeah, there was some liquidity there. Nothing special about it in my mind. Okay, so now we're back above yesterday's high. So we're asking the same exact question that we asked this morning when we got above yesterday's high. Can we hold it? Can we stay above yesterday's high? The odds are much better now than they were earlier on in the day. Why? What's different about it this time from earlier? Well, now we just had a liquidation. And as I said, liquidations actually strengthen the market. They squeeze out weak hands that were buying first thing in the morning, and they give stronger hands a chance to buy the dip. So we're back to watching this high for support. If it holds this time, we should get follow through and get above that overnight high. But first, they got to hold this support. We got to see new buyers up here if they're going to keep it going. Watching the ticks. Rod says, this is what I observed over the last 2 weeks. Yes. And now that I've explained it to you, you'll observe it constantly. Suffice to say, the market is always going to move to whatever is the closest large node. So if the closest large node is from yesterday down here, and the closest large node from 2 days ago is right here, when the opening bell rings, you'll know it's going to one of those two. So if you get up and you get support, you'll watch it go to the one. If you don't, you'll watch it come back to the other, and you'll see it happen over and over and over again. And so then you say, why does it matter? Why does the market care what levels a lot of contracts traded in the past? Why does that even matter? Well, who cares why people went long or short at these levels in the past? Okay? They went long or short at those levels. So when the market comes back to those levels, guess what they're going to do? They're going to do business there once again. So the market's got to go to those levels to find out what business they're going to do. So any level, it doesn't matter whether it was more long or short, any level that had a lot of business in the past, you better believe we're going to go there again in the future. And so all you need to know is what's the momentum in the moment? Is it up or down? And then you target that next large node. Same thing with weak references. Okay, round 2. First attempt to break out. They could not hold this high. Can they hold it this time? Or will we get more chop? Looking for a bounce on those ticks. Okay, you see it? We got the bounce on the ticks. So right now, this high is holding. If you are going to go long, I recommend using a very tight stop because the same thing I said as last time is in play right now, which is it's bullish because we're above the previous day's high and we're bringing in support, but we are very close to the opening price. So if it comes through that opening price, we're going to get another liquidation like we did the last time. So I am bullish as long as we stay above 69.70. My first target to the upside is 69.88. And then we're watching to see what happens at the overnight high. Andrew says, I think your singing moves the market. I think it's the other way around. I think the market moving gets me singing because I'm like, oh, thank God, we're finally going somewhere. Jess says, are there 2 week references at 53.75 and 52.25? You are correct. Yes, there is. I didn't mark them yesterday, but yes, the K period low from yesterday's week. And the L period low is also weak. Good catch. XU says, Charles, do you focus on single prints too, or do you just in the high and low and POC? No, everything. So we talked about this earlier on in the week. The way I trade is essentially just, do I think the market is going to go up or down? Right? But how do I know? Well, how do I come to that conclusion? It's through something called chunking, which basically just means my brain looks at all the information that's available and it on its own, without me having to manually decide these things. My brain just on its own comes to a conclusion of what is likely to happen next. So I'll give you an example. Just now, earlier on in the B period, when the market was above the opening price, here's what my brain was thinking. I was thinking, we don't have enough support. We're not going to go higher. So I thought, you know what's probably going to happen? We're going to liquidate the market, and then we're going to turn around and break higher. That's what I was thinking. But does that mean I just, put in limit buy orders down here and just let them fill and automatically assume it's going to reverse? Of course not, right? So why was I thinking what I was thinking? Where did my brain come up with that information? Well, I was chunking a lot of different things together. First off, let's start the morning talking about the chop zone, right? We just talked about this. And I could go into a whole course about this. I could spend an hour discussing why chop zones are the way they are and how they build and how we measure them and how we da-da-da. But the bottom line is my brain knows what a chop zone is. It knows how to handle chop zones. And it knew this was the chop zone high. So I knew even if we re-entered the range, it's not bearish. It doesn't mean the market is going to sell off the rest of the day. It just meant we were back inside the chop zone. So then the market starts to liquidate and it's falling inside the chop zone. Well, my brain knows what a liquidation break is. It's well established that if the market drops very, very quickly relative to whatever it's been doing and it retraces very, very quickly, it's likely to get follow through. So let's look at it. We'll stretch out the Bookmap here and I'll just show you this happening. Okay. So the market was grinding and grinding and grinding and grinding and just going nowhere. So slow. And then all of a sudden, it just started to fall. Fall very fast. Look at how quickly it fell. Look at how much time it took to get from there to there as compared to the previous hour where we went nowhere, right? But then look at how quickly it retraced from the low. Came literally right back up to that same level where it started to break. It V-shaped. Well, what the heck is that? That's you squeezed the weak hands. You brought in the strong hands. That's a market breaking before it rallies. That's a market squeezing the weak hands to bring in the strong. And I know what that behavior looks like because I've seen it a million times, because I've studied it, because I've obsessed over it. And so you combine those two things together. One, we re-entered the balance area, the chop zone, but we retrace back up and out. That's the first piece of data that gets me bullish up here. The second piece of data, the style, the way it moved, the liquidation. We're talking about the tempo. We're talking about the size of the range. We're talking about how instantly it reversed at support rather than testing it multiple times. There's a half a dozen different behaviors that explain a liquidation. But the point is, my brain knows what a fucking liquidation is. So when it saw the market retrace, again, it's saying all we need is a little bit of support and we've got proof that this market is going to go higher. So then this right here happens. We did the V shape. We retraced. We broke above the previous day's high. And then look at this low right here where it came back down. Where is that low? Exactly at the overnight high, or sorry, the previous day's high. So there's piece of information number 3. I know if the market gets above the previous day's high and comes back down and turns it into support, it's likely to go higher. So I can put a bullish banner up right here. I can go long the market right here because now I have a lot more information. I can go long the market there first thing in the morning when we immediately pushed up there. But what was happening first thing in the morning when I was chunking all this information together in my brain? My brain was going, uh-oh, the ticks are still overbought. We need to come back down. We need to get those ticks back to the zero line. So I assumed on that first push that we made up this morning that we were going to come back and test it. But I wasn't thinking that just now. Why? Because of the liquidation. So this is what I try to say when I explain to traders. When you try to make trading just simple shit, like what is the VWAP doing? What is this? What is the single prints? What is the POC? When you think about just one thing, one piece of data, you're very blind to what is actually happening in the market, because what is actually happening is generally totally random. And so you think you're making sense of it, but you're not. If you really want to be able to make sense of the market, you have to combine dozens of different pieces of information. Re-entering the chop zone was bearish. Coming back down was bearish, right? But the speed and the tempo that it did it was not. The reversal was not. And so you got to understand those subtle differences. So when you ask me, am I focused on single prints or am I focused on volume profile? The answer is yes. The answer is all of it. I know where the buying tail and the selling tail is right now. I know where the opening price is. I know where the previous 2 days range is. I know what the overnight did last night. I know the shape of yesterday's profile, the shape of the overnight profile. I know the areas where we spent time and volume. I know the areas where we would break out. I know what a liquidation looks like. I know what short covering looks like. I know what good support on the ticks looks like, whereas we're just continuing to test something, but we haven't confirmed it yet. You've got to combine a lot of different pieces of information in order to truly have an edge. That's why it takes 2 weeks for me to teach all this stuff. I could teach you single prints in 5 minutes. I could teach you everything you need to know about single prints. But if all you're doing is looking at single prints, you're going to be wrong half the time. You're going to be wrong all the time. So you're going to have to learn more than just single prints. You're going to have to learn to understand the tempo that the market moves. You're going to have to learn to recognize support and resistance levels before you get to them. You're going to have to learn to recognize the shape of TPOs and what they're telling you. You're going to have to chunk a lot of different information at the same time as you see those single prints in order to actually be able to use them. And that's why I encourage everyone to take this Mastery of Markets and Minds workshop. Okay? I do this because I want to empower you. I want to give you the tools so you can read the market just as good as I do every day. The biggest issue I have with teaching people that are new is they never want it to be complicated. They always want me to make it super easy. Oh, we've got single prints up here in the B period, so that means the market's going to go up. Well, no, it fucking doesn't. Right? If we can turn the overnight high into support, then the market's going to keep going up. But just having single prints alone doesn't mean the market is going to go up. We've got a poor high right here. That increases the odds that the market will find support and come back up. So what if we come down here and we don't find support and we keep going lower? Well, then that's a when what should happens doesn't that tells us the market's heading back down to the opening price. You got to understand every one of these signals. There's 100 of them that my mind is focused on all day, every day. And you got to know what they all are intuitively. Your brain has to be able to process it on its own. If I had to sit here and say to myself, what do single prints mean? What does a weak high mean? What does blah, blah, blah? If I had to keep doing that, I'd go nuts. So I chunk it. And that's experience. That's just practice. Anyway, so lecture aside, how do I see the market now? Obviously, this is bullish. Okay. We've got a poor high. So that tells us the market is likely to get above the B period high at some point today. And if they do it now, if they do it in the next 29 minutes, the market will be one time framing to the upside. And that would be very bullish to see. Now we have these single prints that we just created. So the base of the single prints is a magnet. The market wants to come back to 69.88, but it doesn't need to, because if we have momentum, which we just established we have, we don't need to come back for the weakness. So right now we should assume the market is going to repair the poor high before it's going to come back for the single prints. If it does, it's very, very bullish. If it comes back for the single prints first, it's still bullish, but less so. And if it comes back for the single prints and they don't hold as support and the market keeps going lower, then it's not bullish. So you got to be able to understand the relevance of the overnight high, the relevance of the single prints, the relevance of the poor high, and the momentum intraday. You got to combine all that together if you want to know what the market's going to do next. Mastery of markets in mind. I teach it all. marketsinmind.com. If you are thinking about signing up, now is the time. Promo code BRIGADE to save 10%. Giorgio says, do you use 1 tick increments for your profile? No, I'm in 2 tick increments. I switch between 2 and 4 tick depending on the amount of volatility that the market is in. It's been a very long time since I was in 1 tick increments. It's been years since I was in 1 tick. So it's always 2 or 4. Candle Swinger says, sing Willie Nelson. On the trend again. I can't wait to be on the trend again. If this C high can just repair the poor high now, then we'll be on the trend again. On the trend again. Making our way up to the all-time high. With my best of friends, brigade members will lock in profits or die. We've got supply on the trend again. Here we are, we're on the trend again. Okay, so that was the beginning of the trend. We just repaired the poor high that needed to be repaired. So we talked about the fact that there was a magnet at the high and there was a magnet at the base of the single prints, and that the higher probability was we were going to repair the magnet at the high first. Well, we just did. So now one of 2 things happens. Either we immediately make our next push to the upside, which quite frankly would be all-time highs at this point, or we come back down and we test 88 for support. If 88 holds, the momentum continues. And again, we head up for that all-time high. If it fails, then this might be the high of the day. So we are now looking for support at 90 or 88 and continuation higher. On the trend again. Out here squeezing sellers who short every high. Oh, the best of friends. Oh man, I forgot about that survey. Sorry, guys. Not only were the prices totally wrong, but I forgot to even finish the survey. So probably not very helpful now. But 50% of you think we're closing above 69.90. 40% of you think we're closing between 50 and 90, and 11% of you think we're closing below 50. Well, obviously, that doesn't really matter anymore now that we've started one-time framing. Gerard says, how many tick increments for the NQ? So same thing, 2 or 4. I think right now I'm still in 2. No, I'm in 4 tick right now on the Q. So NQ, very similar to the ES. You got some single prints. The base is going to be 25,796. That's your support level. Actually, you've got a ton of support here. It could also be the previous day's high, 25,804, or the overnight high, 25,830. So all of those could be support levels. But as long as you hold the base of the single prints, you should continue higher. And if you fail the base of those single prints, then this might be the high of the day. I also want to make note, we were here 2 days ago, but we're back at the balance area high for the NQ. So if they close above 25,860 by the end of the day today, that will be bullish going into next week. If they close below it, it will not. All right, guys, with that, I think I'll call it quits on the public stream this morning. If you are a member of the Pirate Traders Brigade, then head on over to the private stream. You'll see the link in the email I sent out this morning. As I said, as far as, where I think the market is going to go the rest of the day, right now I am bullish, and I have no reason to assume we won't get up there and make new all-time highs. Once we print the D period, we're still 20 minutes away from doing that. But from that point on, they will have to stay above the C period low. So it would actually be healthier for the market to come down now in the C period and find support than to stay up here and then wait to print the D. So I do suspect we're going to come back down a little bit, but then we should find support and keep going. And at whatever point in the day we get cessation of the trend, that's when we know for sure the momentum is over. With that, I will say goodbye. There's 105 of you hanging out. Please smash that thumbs up button. Those thumbs up really do help the channel. Right now, we are currently at 51. So I would really love to see if we can break 70. Been giving you these free streams all week. I think a little thumbs up from the audience is a fair request. So smash that thumbs up on your way out. And if you are not a member of the brigade, we will see you on Monday morning in the Bookmap stream. If you are a member of the brigade, we'll see you right now in the private stream. Thanks a lot.